Hi, welcome to our webinar this day. We're glad that you're here. We're going to just hang for just a little bit, let everybody join, and then we will get started. Thanks. Okay, well, welcome. Good afternoon. We are starting today's webinar on Pennsylvania taxes for new businesses. I'm Cindy Nellis. I'm with the Penn West Clarion Small Business Development Center, and we're so glad that you're here today. The Pennsylvania Small Business Development Center is partnering with the Department of Revenue to present a four-part series offered monthly. And of course, today's topic is Pennsylvania taxes for new businesses. The other three topics are getting started with MyPath, sales tax basics, and withholding basics. So we do hope that you plan to join us for these other topics in the months ahead. Our presentation today will help you learn and understand the rules, laws, and procedures to follow as an entrepreneur and business owner. Most tax delinquencies often stem from misunderstanding Pennsylvania laws and procedures. So we'll highlight some common errors. Today, we'll discuss income tax, sales and use tax, exemption certificates, and employer withholding tax. In addition, you will learn some guaranteed tips for success and your rights as a Pennsylvania taxpayer. Before we get started, just let me give you a few reminders. As you may have noted, we are recording today's webinar, and we will be sharing that recording with you, along with all the presentation slides that you see and our webinar series flyer, which is right here. All participants have been muted and their video disabled. So if you have a question for our presenters, our experts, we just ask that you put them in the Q&A. And if you have a question for me, your host, please enter them in the chat. Before we get started, I'd like to introduce you to the Small Business Development Center. We are a grant-funded program with a mission to help businesses start, grow, and succeed. We provide education, information, and tools to help you, our business owners, make better business decisions. We do this through our business consulting services and our training. Our consulting services are provided at no cost, and they are confidential. We offer training seminars on a variety of topics that target the needs of small businesses. And with that said, a small business to us is generally defined as a business with less than 500 employees. We also use our funding to provide access to database information and resources related to conducting industry and market research, financial analysis, and they're also used in implementing marketing strategies. The Small Business Development Center partners with many economic development organizations to help connect you, our business owners, to many more resources to help you start and grow your business. In Pennsylvania, our network is made up of 15 centers, all located at institutions of higher education. We're also a part of America's SBDC, which is a national network that enables individuals and businesses all over the country to access our program services right in their neighborhood. This is just information on how you connect with us. And so if you haven't become a client of the SBDC, we hope that you do. Very easy. There's no wrong door. You can connect with me. Use this link to connect with our network. And of course, always contact me with any questions at any time. So I'd like to introduce you to our speaker today. Alicia Gons has over 12 years of experience working for the Pennsylvania Department of Revenue. She currently works as the chief of the Customer Outreach Relations and Engagement Division within the Customer Experience Center. She's responsible for developing relationships with external stakeholders and coordinating any outreach and education initiatives provided by the department. Alicia began her career as a tax account collections technician, working in the Collections and Taxpayer Services call center, and moving into various roles throughout collections and customer service. Her work experience has provided her with vast knowledge of PA tax administration and the inner workings of the department, which she uses to provide positive experiences for the department's customers and stakeholders. So with that, Alicia, I will turn it over to you.
Thanks so much, Cindy. Let me make sure I can share my screen here. All right, how do we look?
Looks great.
Awesome, thank you. All right, so good afternoon, everyone, and thank you for joining us today. As Cindy mentioned, my name is Alicia Gauntz, and I'm the Chief of our Customer Outreach Relations and Engagement Division within the Customer Experience Center. As she mentioned, basically my area is responsible for the outreach and education efforts provided by the department. I am honored to have the opportunity to talk to you all today about Pennsylvania taxes for new businesses. In our experience, we have found that most taxpayers work very hard to comply with Pennsylvania rules and regulations that pertain to their business and taxes, but we also know that tax law is not always the easiest to understand. Our goal today is to walk you through some high-level information that you should know as a new business owner and point out some common errors to avoid, which can ultimately save your business both time and money. So this slide here shows our agenda for today. You can see that we're going to talk about a few different tax types, including income taxes, trust fund taxes, and business use tax. In addition, we'll talk about exemption certificates, tips for success, and your rights as a taxpayer. Get started with income taxes. All businesses have an annual income tax filing requirement, the same as any taxpayer. The type of business structure that you have determines what form that you're going to use when filing. So sole proprietors will report their income and expenses using a PA Schedule C, the profit or loss from business or profession, for each of their businesses. The owner of a single member LLC that receives net profit income reports its income and expenses using the PA Schedule C as well. The owner of a single member LLC that owns and operates a rental property reports its income and expenses using the PA Schedule E, rents and royalty income or loss. And then partnerships, both general and limited, are required to file the PA 20S/PA 65 information return and provide each Pennsylvania resident partner with a PA Schedule RK1 and each non-resident partner with a PA Schedule NRK1 if the partnership is taxed as a partnership for federal income tax purposes. In addition to income taxes, you may also have what are called trust fund taxes. So trust fund taxes are collected by the business owner and then held in trust until they are paid to the Commonwealth. There are 5 taxes that represent trust fund money, but today we're going to primarily focus on 2 that will most likely pertain to your business, which are withholding tax and sales tax. It is important to remember that these taxes must be reported timely and remitted in full to the Commonwealth. Again, you're simply holding these taxes in trust until you file and pay. Please keep in mind that these funds should not be used to cover business or personal expenses, and we suggest that you keep these funds in a separate account until you are ready to remit them to the department. So this slide here shows all 5 of those taxes that represent trust fund money. Some or all of these might pertain to your business. Withholding tax occurs when an employer withholds state income tax from an employee's pay and remits the money to the state. Sales tax is levied on the sale of taxable, tangible personal property and certain services. The next 3 taxes are mainly associated with vehicle leases and rentals, as well as the new tire fee. And they collectively fall under what we call PTA taxes and fees. So PTA stands for Public Transportation Assistance. The vehicle rental tax pertains to car rentals from businesses with an inventory of 5 or more vehicles for rent. And then the tax on liquid fuels is just what it sounds like. This tax is endured by the consumer, although the distributor is liable for its collection and payment. Please note that all trust fund taxes must be accounted for on the accrual basis of accounting. So accrual accounting looks to match revenues and expenses based on the business cycle of the firm, rather than with the actual inflows and outflows of cash. Therefore, sales tax liabilities are recognized at the point of sale and not when the cash is actually received. So we're going to dive a little bit deeper into each of these. So the first question on our slide here is, what is withholding tax? As I mentioned, withholding tax is withholding tax is when an employer withholds PA personal income tax from an employee's pay and remits the money to the state. In MyPath, which is our customer portal, you'll see this broken down by 3 different withholding types. The first withholding type is employer withholding, which applies to regular W-2 employees. Next, we have other income withholding. This is for employees that receive a 1099 miscellaneous or a 1099 NEC. Typically, this applies to independent contractors. If you need assistance in determining whether an individual is a W-2 employee or an independent contractor, you will need to determine things like, is the worker being hired for a temporary project? Can they choose when and where the work is performed? Do they use their own materials for the work performed? Are they paid a flat fee or an hourly rate that's invoiced? As a general rule of thumb, if you answered no to all of these questions, chances are they are a W-2 employee. But if you are uncertain about whether you have W-2 employees or independent contractors, we recommend that you contact the Department of Labor and Industry. A lot of people think they call Department of Revenue. We can help you through that a little bit, but your best course of action is definitely to contact the Department of Labor and Industry. Now, looping back to the types of withholding, we mentioned that there were 3. So the third and final withholding type is retirement withholding. This is reported on a 1099-R, and it applies when withholding is taking on a retirement income. So in the state of Pennsylvania, withholding is taken at the time of the retirement contribution, not distribution, provided certain qualifiers are met at the time of the withdrawal by the employee. This is most likely not going to pertain to business owners, as most of the time your retirement plans are administered by a third party. So the next question on the slide is, when do I withhold it? If your business is a sole proprietorship, partnership, association, corporation, government body, or other entity that employs 1 or more persons, it is required under the Internal Revenue Code to withhold federal income tax from wages paid to an employee. You are then required to withhold and remit Pennsylvania personal income tax from the compensation that you pay your employees. So the simple answer is, every time that you issue a paycheck, you should be withholding. Pennsylvania law requires employees to withhold Pennsylvania personal income tax from employees' compensation in 2 common cases. So when resident employees perform services within or outside of Pennsylvania, and when non-resident employees perform services within Pennsylvania. Currently, Pennsylvania's personal income tax rate is 3.07%. So that means you must withhold 3.07% for any employee who lives in PA, regardless of where the work is being performed, and you must withhold 3.07% for any employee who lives outside of Pennsylvania if the work is being performed in our state. So the next question here is, when is it due? The current schedule for employees to withhold and remit employee taxes on wage and salary income can vary. The frequency for remittance is based on the amount of withholding that is required. So the greater the amount of withholding, the more frequent you're going to be required to remit. The actual return should be filed every quarter for this tax. And then there's also a W-2 reconciliation that is filed at the end of the year. The last question here is, how do you file and pay? So the department has a customer portal, which is called MyPath, for our customers to electronically file. MyPath is an internet-based system that allows taxpayers to file returns and make payments electronically without cost. You simply visit mypath.pa.gov, and then you'll have to sign up for your user profile. One thing to understand about the MyPath customer portal is it does have both logged in and non-logged in functionality, but most business transactions must be completed as a logged in user. Therefore, you will need to create your profile to get started. We have published several Revenue 411 videos, which provide step-by-step instructions for using MyPath. So if you're new to the system, I would highly recommend that you seek out those resources to get some assistance with getting started. It is important to note that under regulation, any payment of $1,000 or more must be remitted electronically. So I strongly encourage you to use the MyPath portal rather than sending a check in the mail to avoid any additional penalties. If you have questions that are related to withholding tax and any of those requirements that I mentioned, I would encourage you to check out our REV 415 Employer Withholding Information Guide for additional information, and that can be found on our website. Next up, we have sales tax. Pennsylvania sales tax is levied on the retail sale, consumption, rental, or use of tangible personal property, including digital products and certain services in Pennsylvania. Currently, Pennsylvania's sales tax rate is 6%. However, by law, a 1% local tax is added to purchases made in Allegheny County, and 2% local tax is added to purchases made in Philadelphia. There are some major items exempt from sales tax, which include food that's not ready to eat, candy and gum, most clothing, textbooks, computer services, pharmaceutical drugs, sales for resale, and residential heating fuels such as oil, electricity, gas, coal, and firewood. Generally, services to the human body, such as haircuts, massages, etc., are also exempt from sales tax. And additionally, permanent landscaping services, not grass cutting, are generally exempt. So when to collect it? Sales tax must be collected at the time of sale unless the sale is on credit. Taxes due on credit sales must be remitted within 30 days of the date of sale. A seller is liable for reporting and remitting taxes and fees with the return covering the period in which either a taxable sale was made or the tax or fee should have been collected. So let's talk through an example. For those of you who are familiar with accounting terms, let me just go back to this real quick. I said earlier that this is the accrual basis of accounting. This is the most commonly used accounting method where businesses report the income when earned and expenses when incurred, as opposed to the cash basis of accounting, which reports the income when received and expenses when paid. So the example I'm about to go through will explain this a little bit more. In August, if you sell a widget for $1,000, since the widget is a taxable item, you charge Sam 6% sales tax, which is $60. However, if Sam only pays you $640 in August and promises to pay the remaining $420 in September, under Pennsylvania law, you are required to remit the full $60 of sales tax due on the sale of the widget in August. So we do want you to be aware that a seller may be assessed for failure to collect taxes and fees, plus charged for appropriate interest and penalties. Just make sure that you fully understand at what points you should be collecting and remitting that information to the department. I apologize, I keep getting distracted by the chat, but it looks like my coworkers are doing a great job at getting you all answers to those, so thank you. If you are someone who has questions about what sales or services are taxable, which we get those questions all the time, that's not something we're going to cover in full detail during this module. We do have a sales tax basics presentation that will be running in the future, or you can check out the retailer's information guide, which is the REV 717, and that includes more detailed taxability list. So our next bullet point here is when is sales tax due? Unlike withholding, which we said would be filed every quarter. Sales tax filing frequency may vary. When you are a new sales tax filer, you are going to be set up as quarterly, meaning that your returns will be due in April, July, October, and January. But your frequency can change. So every year, the department reviews each business that files returns to determine whether or not the filing frequency should be changed. If such a change is made by the department, the business will be notified in writing. It is very important to pay attention to these notices because you don't want to be in a position where you were a quarterly filer and you've now been moved to a monthly filer. Maybe you threw your notice out and you're not aware of that change. So again, make sure you're looking at any notices that are coming from the department. Like withholding tax, we do encourage you to use MyPath for filing and paying. Again, you do have to have a user profile, so it is important to sign up before getting started. The department also has third-party vendors who will provide e-filing software for those taxpayers who do not wish to use the department's e-filing option. There is an approved list of software vendors available on the department's website at revenue.pa.gov. And then just like withholding tax, under regulation, any payment of $1,000 or more must be remitted electronically for sales tax. Moving on to use tax. Use tax is by no means unique to Pennsylvania. So every state that has sales tax also has a use tax. The purpose of use tax is so that Pennsylvania's businesses are not put at a disadvantage to businesses who do not charge sales tax. Sales tax is imposed on taxable goods and services at the time of sale and collected by the seller. In instances where the seller does not charge sales tax on taxable items, the purchaser is responsible for remitting the tax on their first use. So this is use tax. Use tax exposure occurs often when a business buys taxable goods over the internet or through the mail, and the seller doesn't charge PA sales tax. In these cases, the purchaser must pay their use tax obligation in the month following the month of receipt into Pennsylvania. This is also true for purchases a business makes while out of state where no sales tax is charged. The items become taxable upon delivery into Pennsylvania. So the department's audit experience shows that many businesses do owe use tax and several of them don't actually pay it. So we're just trying to bring this to make you aware of the use tax obligations so that way you're not surprised if you do get audited by the department. It's also important to note that use tax applies to individual consumers as well. So it's not just a business tax. We do have a voluntary or a use tax voluntary compliance program, which allows you to go through your records and voluntarily come forward and pay any use tax liabilities. Maybe you've never heard of use tax, or maybe you just didn't realize no sales tax was charged. But rather than wait until you are audited and we charge additional fees, you can self-report any delinquencies to the Department of Revenue and we'll waive these penalties. Those penalties can range from 5 to 25%, so that could be pretty significant. So the next question here is, how do I file and pay? Any business that incurs use tax liability on a regular basis would be encouraged to register for a sales and use tax account. And this can be done via MyPath. You're going to hear me talk about MyPath a lot today. A lot of our functionality or self-service functionality is available on MyPath, and we do have guidance on how to use that portal. If you are already registered for a sales tax, you can file your use tax due along with your sales tax return. If your sales tax return is filed timely, then the use tax is considered timely no matter what filing frequency your business is on. If you are not registered or required to be registered for a sales tax and you have more of a one-off use tax liability that needs to be paid, you may still file the use tax return and pay electronically via MyPath. It just looks a little different. So you will submit this filing right from the MyPath homepage. This means that you won't actually have to log into your user profile. You'll simply visit mypath.pa.gov and click the hyperlink that says file a use tax return. So hopefully that makes sense. If you're a person who is paying use tax on a regular basis, you really want a sales and use tax license. If it's just once in a great while that you have a use tax liability, then you would pay it non-logged on via MyPath. And while the sound of filing and remitting use tax might sound unsettling, remember that our education and enforcement of this tax may help to level the playing field for your business. Without our efforts, PA businesses operate at a 6% disadvantage to online and out-of-state businesses. For example, taxpayer A opens a kitchen supply business. As part of their business, they need furnishings for the business office. They pursue different quotes to get the best deal. In the first instance, they get a quote from an out-of-state seller who can ship the goods into Pennsylvania via third-party freight. The out-of-state seller is not required to charge sales tax. In the second instance, the taxpayer gets a quote from a PA business that, by law, must include sales tax. On first blush, it looks like the better deal is with the out-of-state seller. Many taxpayers would agree with that, and they would make the purchase, resulting in the loss of a sale from a Pennsylvania business and a loss of tax revenue to Pennsylvania. However, once you apply the use tax, the out-of-state seller purchase price actually becomes $10,706. So when the tax is calculated, it's actually the Pennsylvania business who has the better deal. And this is the purpose of use tax. We're trying to keep PA sellers from being undercut by out-of-state sellers. Sales tax would not apply on the products purchased if you are selling to a customer intact. And I apologize, I'm moving pretty quickly through this presentation. Feel free to put your questions in the chat. We do have a lot of information to cover, so I'm not sure how much time we'll have at the end, but if there are any questions that we don't get to, we'll make sure that we get you answers in writing. So I do want to take a moment real quick to talk about the Pennsylvania Exemption Certificate, which is also known as the REV 1220. This exemption certificate is used by a purchaser and a seller to document the reason for a sale of taxable property or services where the tax was not collected. If this is properly completed and accepted in good faith, the REV 1220 will relieve the seller from the collection of tax. Exemption certificates are required to substantiate all exempt sales, with the exception of the following. So sales to government entities, sales of non-taxable tangible personal property or services, and sales where delivery is required to be made outside of the Commonwealth. There are a couple important reminders about the PA exemption certificate. So the first is that there is no generic business exemption. Many people think that just because they are a business, they are tax exempt, and that is not the case. When completing the form, the reason for why the property or service is exempt must be filled out, and it must be signed and dated by the purchaser or lessee in order to be valid. Sellers should also be aware that hard copy exemption certificate must be kept on file by the seller, and they should show both the front and back pages. Documentary evidence must also be retained by the seller on these transactions. So we suggest that you staple a copy of the sales receipt to the exemption form. It is important to note that upon audit, you could be assessed for a sales tax not collected based on an invalid exemption certificate. So you want to make sure that if you are accepting an exemption certificate, you're looking it over to make sure it is properly completed. Now I'm going to talk to you all about some tips for success and resources that the department has to offer. The first tip for success is to maintain adequate records. A question that all new businesses have is, how long do I need to keep my business and tax records? There is no clear answer to that question since each business is different, but I will give you some general advice here. Most of the time, the answer is going to be 4 years. So this means the current year plus the previous 3 years. For payroll, you'll want to keep complete payroll records showing the proper withholding and remittance of Pennsylvania personal income tax and wage expenses for at least 4 years. For mortgage, capital asset, and investment records, you'll need to maintain those documents throughout the life of the obligation. Those can be used for depreciation and cost recovery calculations. For purchases made during a tax year, you'll want to keep your records that will help to document current assets, inventory, and claimed expenses against income. Again, these need to be kept for 4 years. You may also need to keep records of any sales tax paid by you at the time of purchase or use tax paid by you as needed. If you operate in multiple states, you'll need to keep detailed records of Pennsylvania sales, as well as detailed records for every other state where you do business. You'll want to keep a file of all exemption certificates, like we mentioned, and write the transaction number at the top to make it easy to find in the case of an audit, or like we said, staple that receipt to your actual exemption certificate. If you do this, then you should have all of the information related to the transaction right there. We can't really recommend any specific products for use for record management, but we will let you know there are various software products available that help you to keep your books and records in proper order. I definitely recommend you checking them out. Additionally, if you have a smartphone, we recommend that you download a free scanner app. It'll allow you to use the camera and save a PDF copy of your receipt for when you're traveling. One thing you're going to learn to love is as you use our MyPath portal, you can upload attachments. So if you are taking those pictures and saving them as a PDF, it'll make it easy to upload them to the portal. The next tip for success is to keep your address up to date. So we're going to talk about address updates, and we know that there are people who are going to think, gosh, who cares about this? It might seem minor, but it is often overlooked, and it is very important in helping us to communicate effectively with you. Many taxpayers get behind on their tax obligations simply because they're not receiving correspondence from the department. Usually this is because the items were sent to an old or wrong address. Earlier I mentioned that, with sales tax, every November, the Department of Revenue reviews the amount of sales that an entity has. They might determine that your filing frequency needs to be increased and bump you to a monthly filer instead of a quarterly filer. If this happens because you had an increase in sales volume and your address is not up to date, you may not know that you've had a filing frequency change. And then if you file by the quarterly date, you're now delinquent. So again, please keep your address information up to date with us. You can do it directly through the MyPath portal. Once you're logged in, you'll go to the More tab, find the names and addresses panel, and then from there, click Manage Names and Addresses, and it'll let you make any updates that you need to. Again, I'm going to keep saying this, but we do have Revenue 411 videos out there, which walk you step by step how to complete that transaction. In addition, you can receive your notices electronically through MyPath. So if there is a notice that's sent out to you about your filing frequency change, you should be able to see that in your MyPath portal. The next tip for success may seem obvious, but it is to file and pay on time. For income taxes, this is generally a once a year event for you or your business. I can't tell you the number of times I've heard someone say, I forgot that they were due. Failure to file and pay income taxes or estimated tax payments due can result in penalty and interest charges. Another feature that we have on MyPath is to set up due date reminders for all of your tax accounts to ensure that you're compliant with your filing and payment deadlines. For trust fund taxes, due dates vary depending on the amount that you are regularly collecting. So please be sure to educate yourself on your business's filing and payment frequencies. There is information on our website pertaining to both withholding and sales tax obligation. Again, the department applies penalties for late filing as well as late payment. So be sure that you are properly remitting everything. The next tip for success is to have a separate bank account for trust fund taxes. So we recommend that you keep a separate bank account to hold trust fund money and pay the tax due. If you don't keep them separate, you could end up spending the trust fund money and not realizing that you're doing it. So in general, it increases the chance of misusing the tax money. As mentioned earlier, you cannot use trust fund money for business or personal expenses. It's important to know that using trust fund money for anything can be considered a criminal offense. So you definitely want to make sure that you're keeping that separate and you're not accidentally commingling it with any of your other funds. Our next tip for success here is to take advantage of our electronic services. This is the fastest and most effective way to get things done. Little backstory, back in March of 2020, when everything shut down due to COVID, there was nobody in the office to actually manually process items. Using electronic services ensures that everything keeps moving, even when you take the people out of the process. I've already talked to you about some of the things you can do through MyPath, but there is much more. I encourage business owners to schedule their due date reminders so that they receive a notification when filings or payments are due. You can view, save, or print your notices in MyPath. You can request an electronic statement of account, which allows you to see how your payments are applied or what credits you have sitting on your account. Make electronic payments. Again, that's going to keep you from getting hit with any EFT penalties. We have instructions for all of these features, how to complete them in MyPath on our website, and many Revenue 411 videos out there to help you walk you through the process. So please make sure that you're taking advantage of those resources. And then our final tip for success is to safeguard your data. So as a business owner, it's important to protect your data and confidential information at all times. So we're going to go over some tips to help ensure your systems are secure. First, you want to install an anti-malware or antivirus security software on all devices. So this includes your laptops, your desktops, your routers, your tablets, and your phones. And then automatically update that software every so often. You'll want to use strong passwords of 8 or more characters. Use different passwords for each account. Password protect wireless devices and consider a password manager program. Encrypt all sensitive files or emails. Back up your sensitive data to a safe and secure external source, not connected to a full-time network. Make a final review of all return information, especially direct deposit information, prior to e-filing. Wipe, clean, or destroy old computer hard drives and printers that contain sensitive information. Limit access to taxpayer and employee data. And then check the IRS e-services account weekly for a number of returns filed with your FEIN. If you or someone affiliated with your business feels like they are a victim of fraud, please contact our Bureau of Fraud Detection and Analysis. They are here to help you in these situations. All right, and I've talked about some of these throughout the presentation, but I just want to go back through and highlight some resources that are out there for new business owners. A lot of people ask where they can get useful tax information. The first place that I would recommend is our website, revenue.pa.gov. So this slide shows what our current homepage looks like. We are constantly making updates, so it is subject to change in the future. But currently, a lot of the information you need is either in the top toolbar or in the icon belt down the center of the screen. From the top toolbar, you can easily navigate to our online services, forms and publications, get assistance, or obtain other general tax information. The middle icon belt contains access to our more popular services. So you'll see MyPath, Make a Payment, Where's My Refund, Property Tax Rent Rebate, and Customer Service. I just want to throw out there that our website is compatible with all devices. So this, for example, is the mobile view, meaning you can access it anytime, anywhere, even from your smartphone. Most often when people are visiting our website, they have a specific question in mind. So I want to talk to you about how to use the online customer service center. To get there, the first thing you'll want to do is either click the image at the top that says visit, or click the icon down the icon belt that says customer service. Once you've done that, you'll be brought to what we call our online customer service center. Here you can type in your question, or term related to your question and hit search. Any frequently asked questions relating to what you entered will populate. And we do have thousands of frequently asked questions out there. So we do try to update them, keep them relevant, think about what questions customers might have, or evaluate the questions that we see coming in and create additional FAQs out there. These are all vetted, so you can feel comfortable that you're getting a good answer. But again, really great resource if you don't want to wait on hold or you don't want to wait to get a response to an email. Definitely check this out. If you do have a question that is still not answered, you can submit that question to us. So if you look at the top of the screen, there's a tab that says submit a question. Once you do that, it's going to require you to create an account. And then once you're logged in, you'll have access to over 30 categories that let you direct your question to the right place. Again, check out the FAQs first and then submit your question if you still can't find your answer. Once you've submitted your question, you will immediately receive a confirmation notice, and an individual specialized in that area will respond generally within 72 business hours. If you would like to actually talk to a representative on the phone, you can contact the department's Customer Experience Center, which is available Monday through Friday from 8 to 5. Our representatives in the Customer Experience Center are trained to handle almost all calls for the department. So these are the best numbers to get a hold of us. You'll see on the screen, we have business taxes. So that's going to pertain to most of you, the 717-787-1064. The bottom there is personal income tax, 717-787-8201. That's going to be for your annual income tax requirement. And then MyPath. So if you are trying to use our customer portal, you're trying to set up the account, you've checked out our resources and you still need some help, this middle phone number is our designated MyPath line, which is 717-425-2495, extension 72841, and they are trained to help you navigate through MyPath and complete your transaction. Should you need face-to-face customer service, we do have district offices. There is a complete list of the district offices along with their contact information available on our website. They do take walk-ins, but we strongly recommend that you call ahead to make an appointment before visiting one of the district offices. So staffing levels vary. If you make your appointment ahead of time, you can make sure that you're not waiting for a long time to receive assistance. And then last but not least, we want to review what your rights are as a taxpayer. So we have recently revamped our Taxpayer Bill of Rights. Pennsylvania has a Taxpayer Bill of Rights that ensures equity and fairness in tax administration and enforcement. The Taxpayer Bill of Rights sets for uniform procedures so that the Pennsylvania Department of Revenue treats all taxpayers equally and fairly. As a taxpayer, you have access to the following guarantees. So the right to quality service. If you ever feel that you don't receive this type of assistance, please share your experience by visiting our website and completing our customer service feedback survey. You have the right to be informed. So taxpayers have the right to be informed and to receive clear and easily understandable communication from the department. You have the right to confidentiality. The department will not disclose taxpayer information unless authorized by the taxpayer or by law. So we take confidentiality very seriously. The right to retain representation. So taxpayers have the right to retain an authorized representative, such as a CPA or an attorney, to represent them. And then finally, you have the right to challenge the department's position and be heard. So per your right to challenge the department's decision and be heard, you can file a petition with the Board of Appeals. But it's important to know that there are appeal timeframes which need to be followed when petitioning the board. The general timeframe to file an appeal with the Board of Appeals is 60 days from the mailing date of the assessment notice. If a taxpayer is not satisfied with the decision from the Board of Appeals, they may appeal to the Board of Finance and Revenue. The general time frame to file an appeal with the Board of Finance and Revenue is 60 days from the mailing date of the decision of the Board of Appeals. To appeal that decision, a taxpayer may file with the Commonwealth Court of Pennsylvania, but that time frame is 30 days. So 30 days of the mailing date of the decision of the Board of Finance and Revenue. So 60 days from your assessment notice, 60 days from your Board of Appeals decision, 30 days from the decision of the Board of Finance and Revenue. For specific appeal timeframes for each tax type, we suggest that you refer to the REV 460 and the REV 1799A. That spells out all of that information in more detail. So again, those are found on our website. We discussed the rights of taxpayers and their representatives. Now we're going to review the department's rights. Earlier, we talked about record keeping. This ties into the department's right to audit. So keep in mind that we do perform audits. We don't perform our audits just to find out what businesses are doing wrong. It's more of a standard business practice to ensure everyone knows how to do things the right way so that all businesses are treated equally. Anytime an audit is conducted, the department will provide the taxpayer with a complete explanation of the audit findings for that individual taxpayer and go over their rights during the process. Again, if you do get an audit notice, don't be alarmed. It does not mean you did something wrong. Audits are standard business practices of the Commonwealth. And then this slide here talks about some general enforcement. Again, we're having this session today so that you don't land here, but we do want you to know that the department does have these options. If you don't file a return, pay the tax due, or file a timely appeal for a tax balance. The left side of the screen is more of our, I don't want to say more lenient, but more of our common enforcement tools. And then the right side of the screen are the tools that we use when we receive little cooperation from the taxpayer. So again, our goal in inviting you here today is to help you avoid the scenario where these tools are used, but we do have different levels of enforcement. So I will highlight a few of these. Collection calls. A lot of people think that because the IRS does not make outbound phone calls, that the Department of Revenue does not either. That is incorrect. So the Department of Revenue will call out if you have a liability due or non-filed periods. We do file and publish liens. We can definitely offset your refund, whether that be a refund that you are due by the state of Pennsylvania or a refund from the federal government. We can revoke your sales tax license if one of your accounts is not clear. Also, we do have tools such as wage garnishment, bank attachments, and issuing citations. So again, hopefully you never have to experience any of this, but they are tools that we have. You might wonder why we have a second enforcement slide. Again, trust fund taxes are treated a little bit differently. Failure to timely collect and report sales tax money can lead to civil penalties equal to 50% of the unpaid tax and criminal penalties for theft, embezzlement, and misappropriation of government funds. So this is in addition to the standard penalty and interest. This is an example of where the cost of non-compliance is higher than the cost of compliance. Something unique to trust fund liability is that it attaches to the responsible party. So the law says that the liability is enforceable against such person, his representatives, and any person receiving part of such fund. So on a practical level, this means that an owner of a limited liability company that goes out of business with unpaid trust fund taxes remains liable for those taxes. The liability doesn't just go away with a defunct business. That means that the department will pursue collection against the individual using all available enforcement tools, including liens. Again, we don't want you here. We're meeting with you today to help you understand your responsibilities so that you're not here. We just want to make you aware of this. Previously, we talked about protecting yourself so that you don't become a victim of fraud. This slide here, however, is telling you what to do if you suspect someone else is reporting fraud. So tax evasion is a crime that hurts all Pennsylvanians. because when taxpayers don't pay their fair shares, it decreases the revenue available to fund essential state programs and services. If you do suspect tax fraud, we're asking that you report the activity directly to the Department of Revenue in as much detail as possible. So you can use the contact information that's listed on this slide, or you can just go to our website, type fraud in the search box, and then report suspected tax fraud activity will pop up and it'll give you all the information that you need. After listening to this presentation today, if you find yourself thinking that you might have a tax requirement that you weren't aware of, we do have a voluntary disclosure program, often referred to as VDP. This program was created for individuals and businesses that have not met their tax obligations because they were not aware of them. So the department's liaison officer will work to make sure that all of the taxpayers' filing and payment requirements have been fulfilled. There are incentives for coming forward in return for their voluntary disclosure, filing their tax returns, and clearing their tax debts. Taxpayers are only responsible for the payment of tax and interest. Penalties for all taxes administered by the PA Department of Revenue will be waived when the requirements of the voluntary disclosure agreement have been completed. So it's important to know that the program is only available to those taxpayers who are not registered with the department or for which no investigation or collection actions have begun. And then, of course, we want you to know that we have several social media platforms. We generally use these outlets as a means to push information to taxpayers as well. So we will post like tax law changes, fast facts, events, anything that's going on with the Department of Revenue. So we have a LinkedIn, a Twitter, and a Facebook page. We strongly recommend that you go and check us out, follow us, shameless plug. And before we wrap it up, I just want to kind of revisit a few of the resources that we talked about. So the REV 588, Starting a Business in Pennsylvania, a guide to PA taxes, is really great for new business owners. It pretty much outlines everything you need to know as a new business owner. The REV 717 is that sales tax guide if you need more detailed taxability lists on what is taxable and what's not taxable. And then the REV 415 is that employer withholding information guide, which contains all of those withholding details that we talked about. They all provide a lot of good information for getting started, all available on the department's website under Forms for Businesses. So with that, I think that concludes our presentation for today. I know it was a lot of information. I know that my coworkers have been answering your questions here, but I do want to reiterate the fact I saw some MyPath questions coming through. We are going to have a module for getting started with MyPath, sales tax basics. We will have that module as well, which will talk more detail about, what is taxable and what's not taxable. And then Cindy, what was our other one, withholding basics that we have?
Yes, so next month it's sales tax and then the following month is withholding.
Okay, thank you. So all really good modules. If you are brand new to this and you want more information, again, I know this was a lot to take in, but please come check out our other modules. Thank you all.
Thanks, Alicia. And I know there's more questions coming through. While we let those questions post and be answered, I'm going to go ahead and launch a 1-question poll for today, so we can just get some immediate feedback from everyone. As a reminder, we are going to be sending out, following today's webinar, quickly following, will be the evaluation form. It's from the Small Business Development Center, and it's a way for us to get information not only on what you thought about today, but also when you like your training, in what format you want your training, as well as other topics that you would like training in. So that's great, helpful information for us. And then as a reminder, we will also be sending out the recording from today and the slides from Alicia and from me. And that should be coming as soon as the recording is complete. So With that, I just thank you for the poll. Alicia, thank you. And thank you to all of your colleagues for sticking with us. We had quite a few questions that were answered. So you all kept them very, very busy today. So I appreciate their time as well. And then we look forward to having you back for next month's webinar on sales tax basics. So I'll be sending the flyer out with your slides. And the question, will the Q&A be included in the send? I do believe it is. I'll make note of that to make sure that that is sent as well, because I do know there are a lot of questions that needed to be answered. So with that, I don't know, there was one more question that was posted. I'll go ahead and keep the webinar open, but we'll finish it with that last question. And we just are thankful that you are with us today. Thanks for our experts, and we'll look forward to seeing you all next month. Thank you.